Hey everybody, Mark Levine from EBMG, and we are a New York City property management firm, and I'm here with Ed McCool from McCool & Associates, also a New York City-based insurance brokerage. So we've done a few videos already, but this is the last of our set for now, and hopefully we could do more in the future. But what we wanted to talk about was buildings, and these could be co-op or condo buildings, and what are the best practices so that we could save money for these particular clients when they're bidding out their insurance policies, or what should they be looking for to kind of drive down their prices but not actually sacrificing any of their coverage?
Okay. Well, the first thing would be deal with brokers who specialize in co-ops and condo. There are plenty of insurance brokers out there that have a license. Does not mean that they know this field. Co-ops and condos are just a different animal. If you're dealing with a broker who specializes in this, they have access to the companies who specialize in this. They have access to programs that can provide larger limits and better coverage at a savings. So the first thing would be deal with a broker who knows what he's doing. I understand that every board member and every person has a friend or a cousin or a brother who's an insurance agent. Doesn't necessarily mean that they're going to be able to do the same job that the broker who specializes in this will be able to do. Number two is take a look at your deductibles. Okay, we see plenty of cases where buildings still maintain a $1,000 deductible or a $2,500 deductible. Now, if you're a smaller building, okay, maybe that makes sense. Actually, in all reality, I would never have a $1,000 deductible. If I'm a smaller building, I'd start with $2,500 and work my way up. From a larger building, I start at $5,000 and possibly higher. The difference between $1,000 and $5,000 could be as much as a 15% savings.
Wow.
Okay, so it is a big difference. So take a look at that. Also, areas that to save money, claims. Okay, claims is the single biggest driver of increased premiums. And what I mean by claims is everyone's going to have it, and that's why you have insurance. But you need to weigh whether it makes sense to put in a claim. For example, if you have a fire in the laundry room, we had one time. It was about $3,000 worth of damage. They had a $2,500 deductible, and they still wanted to submit it so that they get their $500. I can understand that, but in the long run, that claim now sits on their record. Okay, so now for $500, they put a claim on record. They went on to have another claim 6 months later, and all of a sudden their insurance rates the following year were astronomical because there were two claims, and one of them was pretty hefty on their record. So you want to just weigh whether it makes sense to put in a claim. Okay, $5,000 deductible, $6,000 worth of damage. Again, you want to weigh that. $5,000 deductible, $20,000 worth of damage. Okay, well that makes sense, and that's why you pay for insurance. The only real exception is when it comes to water damage. You got to be careful there because water can turn into mold. And if it's a severe case of water damage there, you may in fact want to put that in. Some companies will take what's called informational purposes only, okay? And that means you're putting in a claim to let them know there's a possibility it could turn into a claim, but you're not actually looking to have an adjuster assigned and for it to be adjusted. Some companies will do it, some won't. That may in fact still sit on your record, but there won't be a payout over there, and you can decide, okay, well, I want to put in the claim at a later date, or if it turns into a situation where mold results at a later date, that claim is on record, and the insurance company can't go back and say, well, you never submitted the original claim, don't bother with the mold because we're not covering it. So that would be my advice there. Those are the ways to reduce your premiums there. The last way, I guess, would be is speak to your insurance broker. Okay, most insurance brokers, again, who specialize in this, have access to multiple markets, and we know which ones are going to be most competitive. My agency, every year, we take a look at every building in-house, and we take a look and say, okay, well, is the current company they're with the one that they should be with, and we determine what's best for them. They should have dialogue with their agent just to make sure that they're doing this. And they don't need to remarket their insurance every year to 5 different brokers because that honestly makes no sense. Most brokers access the same companies, but they need to have some clear dialogue with the broker.
Now, let me ask you a question. If there's an incident, let's say there's some loss, and it didn't appear to be an issue at first, sometimes these things kind of take a little while to figure out. What is the limit? I know that there's been some question of, is there even a limit? That I put the insurance company on notice that there was an incident. If I waited 3 months because it didn't affect anybody, but then something changed and there was a difference in the thinking, and now it's going to cost a lot more money than we expected. Can the insurance company say to us, well, we're sitting in October 1st, let's say, and this happened in May. Sorry, you didn't give us notice.
Right.
Is there some sort of limit, or is it just now the way that the market is structured? We have no limit as long as it's something that we can prove.
Well, you have property and you have liability. Now, in the insurance policy, it doesn't necessarily say you have 2 weeks or 30 days to report a claim. It says you need to do it on a timely basis. So from a property side, you may want to put it in at a later date simply because, like you said, well, you thought the original damage was a couple $100 and it turns out to be $10,000. So if you're going to do work, what I always tell people is save anything, okay? If you're going in and you have to rip out the walls, you want to make sure you take pictures, okay? So at a later date, what the insurance company does is they assign an adjuster. He goes out and looks at the damage. So if he can't look at the damage, that's where you come into some problems there. So you want to make sure you take pictures, save invoices or any kind of work orders from the contractors that you've used. And the insurance company shouldn't give you a problem as long as they have enough documentation and proof that there actually was a claim, okay? So that's what you want to do. On the liability side, it works a little bit different. Liability side, if someone walks and across the property and slips and falls, if you're aware of some details, you probably should put the insurance company on notice, okay? Especially if you know that person. If a shareholder or someone slips on the steps, they said, I'm fine, I'm okay, don't worry about it, I would still put that in, okay? Because you're aware, you have the details. And an insurance company, the only time they can really deny a claim on the liability side is if they feel that you prejudiced their case, okay? And if you don't put something in when you have notice of it, of details of it, they can consider that prejudice in that case. That person who walks by in the street, slips and falls, gets up and walks away, well, you don't know their name, you don't know who they are. That's a different story.
Until they drop a lawsuit on you.
Right,
And then
at that
you
point,
learn quickly what their name is.
Absolutely. At that point, you got to put it
Yeah.
in, and you're okay. But if that shareholder falls in the hallway and you don't put it in, they say, we're fine. Well, guess what? 6 months later, their
Right.
back's hurting and they're going to sue. The insurance company can say, you knew about this 6 months ago, and they can decline it.
Right.
So on the liability side, it's a little bit different.
Okay, well, I think that's super helpful. So if you like this and you want more content, you can follow us all over social media at facebook.com/XLBradshaw. We are all over Twitter and Instagram and all the other social channels at XLBradshaw, and of course, www.ebmg.com. We have a blog there too, and if you want to give your details as well about your website, where people can find you.
It's www.mccool.com. And you can sign up for our social media platforms there. We do a quick tips insurance video every week, and we do blogs as well, and they're all very educational.
All right, well, we'll see you next time.